Morning, good afternoon, good evening. I've had the opportunity to comment on the election of President Donald Trump. And when he did win those elections, I think many people predicted that he was not going to be the usual. It wasn't going to be business as usual. He had his own approach with his America First approach. I think many people braced themselves for tough times ahead. And he was sworn in January, and we are in April, and already he has rocked the world. He has signed probably more executive orders than some of the serving presidents, past presidents, have served in their entire 4-year term, or even 8-year term. And many of those orders have caused serious turmoil, not only in America, but the world over. For the third world countries particularly, the scrapping of USAID has caused some serious economic hardships in third world countries, particularly those like in Africa that were depending on USAID to finance such critical services as the buying of drugs, the HIV/AIDS drugs, and many other crucial areas. And now he has moved on. His next big thing has been tariff. He's gone back and looked at the whole world, and literally every country on earth found itself in a situation where when they didn't have any tariffs with America before, suddenly found they have now tariffs. And they've been varied. And it has caused serious economic turmoil, not only in the developed countries, but in developing countries too. Here is a BBC report on the issue, probably explaining better what these tariffs really mean.
To Jason Furman. He's a former economic advisor to President Obama and was chairman of the White House Council of Economic Advisors and is now economics professor at Harvard University. Thank you so much for being here live on the program. As a political watcher, what do you make of what we've seen over the last few days?
It is just truly extraordinary. It is very rare to see a leader willing to take this much short-term pain in exchange for what they think will be long-term gain. In this case, I think they're long-term, there's no gains either, and that the administration is sticking to its guns with the almost unanimous rebuke of their approach is not something I had expected to see.
You see this sort of market fallout sometimes after a pandemic, for example, after a war, after a natural disaster, but not after something announced by the president of the United States. I mean, even a supporter, Bill Ackman, tweeted, and I'll read out the tweet and put it onto the screen at the same time, "We are heading for a self-induced economic nuclear winter, and we should start hunkering down." Is it that bad? Do you agree with that sort of assessment?
There's a huge unknown here, which is what the effects of confidence and uncertainty will have. Trade is only 13% of the US economy. There's an ability to withstand a big trade shock. There's less ability to withstand a confidence and uncertainty shock. And that's what makes this administration's behavior just so puzzling. I was in the White House during a financial crisis. When things like this were going on, we would spend all weekend in the White House. The president would be there with us a bunch of the time, with the goal of having an announcement before the Asian markets opened, which would be Sunday evening, our time in the United States. Here, we don't have anything to remotely calm markets, even after the US markets have opened. I think at some point the president will be forced off this because market pricing right now does not fully incorporate that he's going to really stick with his guns.
Of course, many of these tariffs actually kick in on April the 9th, so a couple of days away. Do you get any sort of sense where you are that the president will pause things, as so many people have been urging him to do?
Yeah, there's a lot of whispering and a lot of hoping that he will hit pause on that next round of tariffs. That's the so-called reciprocal tariffs that go into effect on 60 different economies around the world on Wednesday. Now, note, if he hits pause, that would be much better than the current situation. It would still leave the US average tariff rate around 12 to 15%, which is on par with Iran and Venezuela and higher than we've had in this country since the 1940s. So even the hopeful fallback that people like Bill Ackman are calling for is something that would have been almost unimaginable as recently as a few months ago.
Well, joining me now is Mike Monsieur, president of FBB Capital. And Mike, what about any potential way to stem the bleeding? Is that possible at this stage?
Yeah, you typically don't want to be doing a lot of rebalancing in the middle of these big downdrafts as an individual investor. So when you have down 4%, down 5%, down 3% today, you don't want to be making big changes to your portfolio. Hopefully you've kind of positioned yourself prior to this to not be out over your skis in terms of risk. But markets, remember, in the last 2 years, markets were up 20+% each year. So if you hadn't been actively rebalancing, a lot of people would find themselves just naturally with more stocks than maybe their target allocation should have them at. Now, the market's done some of that work for them now in terms of reducing that exposure. But if they still are feeling like they are out over their skis a bit or have a little bit too much risk, marginally, incrementally reducing, sitting in a 4% Treasury, 10-year Treasury bond or a 5% corporate bond is not a bad option in terms of like another place to place capital. But you don't want to be doing big moves. You don't want to sell all your stocks. You don't want to sell half your stocks. Those are these big downdrafts. You've got a lot of institutions moving the markets around. As individual investors, you want to just kind of take a back seat, let the volatility come down a bit, and prepare, make a shopping list and think about where maybe you should be shifting funds. We're focusing on higher quality stuff. We've been in that position for the last couple of years. And your markets commentator is right. There's no place to hide, but there are places that aren't down 5% on a day the market's down 5%, and you should focus on that and preserving some capital and having some dry powder if things really wash out here.
And is there any impact of Donald Trump and Peter Navarro, calling for people to steady their nerves and they are holding the line on this policy?
Yeah, so I'll put the politics aside for a second, but from an investment standpoint, yes, you want to keep your heads, right? What happens is this fight or flight kind of force takes over, and as humans, a lot of times we want to flee from this, but the history has shown over and over again when you try to do that. You might be, a lot of these big down days are followed by some of the biggest up days. And if you miss those up days, it can dramatically negatively impact your performance over the long term. So there is that part of it from the investment standpoint to kind of stay the course, steady your nerves a little bit, feel confident about your allocation. If you've done the work to feel confident about your allocation, if you haven't done that work, then you should be having those conversations as a family or with your financial advisor, and making maybe some changes on the margin. On the policy side, I'll leave that for someone else. But it is frustrating for investors and particularly individual investors that they feel like they've been doing the right things here, and this feels like kind of an unforced error in terms of policy that is definitively impacting markets now across the globe.
Now, the UK government has announced a relaxation of electric vehicle sales targets to help the car industry in the face of those trade tariffs from America. Currently, at least 28% of cars sold by manufacturers in the UK must be electric vehicles. That will rise every year till 2030, when every petrol and diesel car sold will incur a fine amid mounting pressure from car.
I'll leave it at that point. The important thing here is this whole thing of tariffs. Most people will agree that when you start imposing tariffs, as the US has done, it has forced others to react and impose and retaliate. And this, many fear, could cause a trade war, particularly among the real big spenders, the big nations like America and China. The US has imposed some tariffs on China, and China has decided to retaliate and impose similar percentage, 34%, I think it is, retaliatory tariffs on America. And President Trump is threatening to impose a further 50% tariffs on China. So that altogether, in some goods, those who import things from China will find themselves paying as much as 105% tariffs for importing things from China. Many people fear if this trade war is allowed to continue, it could have a devastating effect on the whole world economy. Prices will start going up, inflation will start going up, unemployment will start going up. The other point that must be said here is that this could have been avoided. Many people would agree that as much as America may have had cause to impose all these tariffs, what they could have done is negotiate with the various countries if they were unhappy about the trading terms with those respective countries, and come to some agreement without having to impose these tariffs upfront. Because, like I said, by imposing the tariffs and forcing those other countries to retaliate, it has caused such instability in the economy, the world economy, to the point where no one can honestly say they've benefited. That is what is at stake here. And even if at the end of the day, as some people have argued, it will give America the upper hand in its negotiations with those respective countries. People will still argue, was the chaos that was caused in the market worth it? Because not only in those other countries where the tariffs have been imposed, as this caused the economics turmoil, even in America itself, the American industry has failed. Too has felt the economic disturbance that this has caused. So in that regard, this could, yes, it could have easily been avoided by negotiating first without having to go for the jugular vein. This is how much some of these tariffs have cost. We are looking at here the British one, FTSE. If we consider at 100% on the 1st of April, it has dropped in some cases to nearly 85% at one point since then. And this has knocked the price, the value of the stock. Percentage itself may be small, but in monetary terms, it's billions of pounds. In the case of the British, the cost of this turbulence is in terms of as much as 250,000 since the first tariffs were imposed. And this 250 billion pounds since the tariffs were imposed on the 3rd of April. That is a considerable amount of money. And that is a downward effect of affecting industry and confidence in shares and in investments, such that it will slow down the economy. And many people are predicting that if this tit for tat, particularly between China, the US, Canada, and some of the other big nations, trading nations, is not stopped quickly, it could push the world into economic recession for the whole world. While the developed countries are losing billions of dollars in money, and many will see unemployment going up, I think in third world countries, they will also feel the ill effects of that. Because let's not forget here, most of the third world countries were already living from hand to mouth. And so these economic instabilities will just push them over the edge. We're still those countries that were already in chaos, civil wars, that will push them over the edge. And so we'll be looking at the cost to those nations will be calculated in terms of millions of lives lost, because of this. So one can only hope that President Trump, as much as he has rocked the world already, he's already 4 months in office, he will relent and hold a steady course from now on. Because the costs for the world, and particularly the developing countries, could be enormous. There's no doubt that his 4 months in office has definitely changed the world. And some of the developing countries have paid a very dear price for it. One can only hope, as I said, that this stops. Many people in the know on the financial issues are hoping that the negotiations on tariffs will start in earnest by the end of this coming week at the latest, and bring financial stability to the world. Because if it doesn't, and the world is really pushed to a serious economic meltdown, this would be of our own making. Unlike the other economic turmoil that was caused by such thing as the latest, most recent one was the COVID. This one would have been a man-made problem. And I honestly think that those countries, particularly in the third world, countries like Zimbabwe, where the country has failed to perform to its real potential, will take this as a warning to sit down and start looking at their problems with a sense of urgency. Zimbabwe is in a bad place. There cannot be any doubt about it. And we really need to sit down and think about how are we going to get the country out of this mess. Other nations have their own problems. And they are not going to keep on extending a helping hand. So in terms of aid, if the chaos that is we can witness in the world right now continues, we can be certain that in future, the level of aid that we have received in the past will not be repeated. A country like Zimbabwe that used to be the breadbasket of the region, failing to produce enough food to feed its own people, does not, in all honesty, inspire somebody to give a helping hand. think about it. Thank you very much for those who were able to join. Have a good evening.